You know, I've always aimed to be a sharp-dressed loan officer, but I don't think my life's been nearly as exciting as those long-bearded beer drinkers and hellraisers in ZZ Top. But their huge 80s album, Eliminator, is the perfect tie-in to today's theme: how to get rid of PMI, or private mortgage insurance, on your home loan. So if you're ready to lose those extra payments like a pair of cheap sunglasses, let's learn how to rock dropping PMI starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. Before we talk about getting rid of PMI, let's first cover briefly what it is. If you obtain a conventional or conforming mortgage and you make less than a 20% down payment, your lender will usually require that you carry PMI, also known as private mortgage insurance. This is typically, but not always, an additional monthly payment that is made along with your principal and interest payment. Now, it goes without saying that there are still a lot of people out there who will discourage you from taking PMI in the first place, but I am not one of them. PMI can offer a highly effective way to finance a property instead of waiting to save a full 20%, something that's just unrealistic for some. So if you have good credit scores and you fit PMI's best profile, you might find PMI to be extremely inexpensive and a valuable tool for facilitating home ownership in the near term. And believe me, there's nothing wrong with that. Okay, so now that you have a loan with PMI, let's talk about the ways you can get rid of it. Oh, and before we do, if you have an FHA loan, these rules won't apply, so get in touch and I can explain your options for those programs. Let's also acknowledge that in a low-rated environment, and in areas where home prices tend to appreciate rapidly, it's very common for homeowners to exit PMI simply by refinancing. When they do that, they will usually obtain both a lower rate and removal of the PMI. But if a refinance is not an option, then we can proceed with these next alternatives. The Homeowners Protection Act of 1998 provides for both borrower-requested and lender-requested cancellation of PMI. When a borrower requests cancellation, they will usually need to provide a written request to their lender to demonstrate that they do not have any subordinate liens on the property, like a HELOC, second mortgage, or home equity loan. They will also need to document that they have a satisfactory payment history and that the value of the property has not declined. Borrowers can request cancellation for the date the loan balance reaches 80% of the original value of the home, whether by the regular amortization schedule or on the date the loan balance actually reaches 80% of the original value. Okay, but what if you, as the borrower, forget to make this request? Can your lender continue to collect PMI indefinitely? No, they cannot. So long as you have been current on your payments, the lender is required to cancel the mortgage insurance policy on the date the loan balance reaches 78% of the original value. And when we say original value, we mean the lesser of the purchase price or appraised value if the last transaction was a purchase transaction. And we mean the appraised value if the last transaction was a refinance. Finally, and perhaps most intuitively, borrowers want to know how to cancel PMI based on a value increase of their home, what we call the current value method. In order to do this, a homeowner may encounter varying criteria. However, the conforming standards for removing PMI based on current value are these: A, a 2-year history on repayment of the loan; B, a satisfactory payment history on the loan; and C, a current appraisal that shows a loan to value, or LTV, of less than 75% if fewer than 5 years have gone by since the loan originally closed, or a current appraisal that shows an LTV of less than 80% if more than 5 years have elapsed. And again, it's important to be in touch with your individual mortgage servicer to know exactly which requirements will be in play. This can be especially true if significant remodeling or renovation of the home have occurred since you took PMI. Managing your existing mortgage and private mortgage insurance can quickly get confusing, stressful, and complex, so there's no need to tackle it on your own. If you have questions about PMI or any other aspect of the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the contacts below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below, and we'll keep the hits coming.